Good evening. This is Ken from tortoisecapital.com with a market health check and daily trading plan for December 28th, 2010. We're going to start with the market health check, looking at SPY and looking back 10, 20, and 30 days. The black line is in the center is the slope of the 30-day regression line, and looked very powerful. And the channel being formed by the two outside black lines. Red horizontal lines being support levels from previous support and resistance. We have price is better than the 20-day moving average, which is better than the 50-day moving average in red, which is better than the 200-day moving average in blue, and that's very, very favorable. ADX has climbed to 27.27, and with green over red, that's a very positive sign. The slope of the 20 and the 50 and the 200 are all up, and that's favorable. On a 10-day basis, using Williams percent R10, we are still well into overbought conditions, and you can see it can remain overbought for a long time. And on an annual basis, we are well into overbought as well. No resistance overhead, and the nearest support level at about 123.5, and all things look favorable for continuation of the bull market. Shifting to the daily trading plan, again, bull quiet. We are at 70 on an annual basis, and 96 on a 10-day basis on a scale of 0 to 100. That's slightly overbought. Percent stretch relative to the 200-day moving average and the slope of the 50 are both highlighted in green, which is very, very strong, very bullish. ADX at 27.3 is a very strong uptrend. And the ATR percentage, the daily volatility, continues to decline at 0.63%, as quiet as it's been in the past year. No trend standing out on the gap stats right now. The standard deviation of SPY's gap remains at 0.75%, and the largest average intraday move from low to high or high to low in SPY remains at about 2.33%. You can see that we've been overbought for some time now. You can see here how volatility is just falling completely off the edge of the cliff right there. No signals in overreaction or channeling. Pivot point for tomorrow is at 125.75. On the 10-day max pain candidates, looking at American Express and Intel once more. I tried trading both of these today. They just refusing to move, but we'll just keep trying them until they respond. Alcoa, Merck, and Walmart on round out our max pain in the Dow. In the ETF 100 and max pain, China, India, European large caps, Germany, and the treasuries. Quite a few 551W setups. IBM, Coke, Microsoft, Walmart, Medtronics. Quite a few triple screens. You can see the symbols there. I won't read them to you. The elder safe zone, we got increasing strength of trend in the all-important gold, Taiwan, silver, and the VIX. And in weakening trends are in steel and Chile. The elder safe zone also fired for silver wheaten going up. New 3060 stealth candidates, Brazil, utilities, and natural gas. And in the large cap, Cisco, Bank of America, Boeing, and Merck. In the tactical trade report, the percent losers today you can see American Express, Disney, Caterpillar, Home Depot, 3M. The percent winners, Hewlett Packard, Kraft, Chevron, General Electric, and Cisco. Intel remains of interest to me. I did make 1R on them today, but it was heavy sledding. They're max pain on the 10-day, but it's one of the min pain on the 3-day, and so Intel is showing some signs of resiliency here. American Express remains a favored target for me. It's a 10-day and 3-day max pain, and it was a percent loser today. Over in ETF land, the winners gold, silver, and natural gas. And in the pattern trades, quite a few dojis in the Dow, channeling for Johnson & Johnson and Merck, 551W signals in IBM, Coca-Cola, and Microsoft. Inside the ETFs, not as many dojis, no pattern signals, looking for max pain in natural gas, Europe, and U.S. Treasuries. You can see how compelling the 30-day regression line is. The slope is the blue line, continues to rise, and there's no resistance overhead, as you can see on the price chart, and the percent stretch continues to pull away from the 200-day moving average. Is now more than one standard deviation away. Would like to highlight in the elder safe zone, only Chile was measurably weaker today. Gold, Taiwan, and silver got stronger. In the Dow Quality Report, looking at Merck, Bank of America, Boeing, and Cisco, all are showing favorable deviations, slowly improving. In the ETFs, it would be treasuries, natural gas, and utilities. And that's everything I want to take a look at for tomorrow. I'm still targeting the techs, small caps, financial logic chains, looking for Intel and American Express to come out of their doldrums, and I will reward any momentum in silver with a tightly managed stop and maintaining only a core position overnight. That's Ken Long from Tortoise Capital Management with the daily market health check and daily trading plan. Thanks for your attention.